All right, so thank you. So let's take a look at Amazon real quick. I had drawn out some levels for Amazon, but now that I'm seeing it, so this is my latest analysis from I think from Sunday, from our call on Sunday. Now that I'm looking at it, I'm seeing a very clear head and shoulders pattern. So I'm just gonna draw it out for you. Now, like Carb said, this is a perfect stock. I mean, I think people are upset at it because it's not, because it coming from 3,000 or whatever it was, or $2,000 coming down to $100. Like, I think that it's really upsetting to people because it's not gonna move $50, $50, $100 in a day the way that it used to. And that's where people really get paid, right? But it is what it is. So I think there's still money to be made in this. I just think you have to be a little bit more patient, play a little closer to the strike, right? Like if we're at prices currently at 110, you don't want to go to maybe the 120s. Maybe you want to keep it around 115 or so, right? So Jagus, what up? So yeah. So right now I see an inverse. A head and shoulders forming. So now let me just mark these new boxes. I'm just gonna mark them with a green border, or actually a black border. Because I had all of these support levels kind of drawn out and all the support touches drawn out on Sunday, but for whatever reason I didn't see the head and shoulders on Sunday. So I just want to make sure that we're looking at a different analysis here. I mean, and based on this head and shoulders, for me it's like very clean. This actually looks like the head and shoulders that Baba had right before it dropped. Let me go to Baba's chart real quick so you can see what I'm talking about. This is one of my favorite head and shoulders examples because of how clean it was, right? Look at how clean this head and shoulders was here. It came down and it found support, bounced, came down, touched the same exact support, exact same level, formed the higher high, came down, formed the lower high, and then dumped, right? Dumped. And then after it dumped, like really dumped, right? And then it came back and it retested and a bunch of stuff. Now it's doing a cup and handle, but Amazon has the same look that Baba had right when it came down to that level. It came down to that one level, formed the shoulder, right? Same thing. So now what I see for it is, if it's gonna do the same move that Baba did, the way that I'd call it is, and I don't know, I mean, my thing with this play is we have to time it. I don't know what kind of like, they have earnings coming up at the end of the month, so I wouldn't be in a rush to enter a play. I kind of want to see what it does. Although I think that this 102, what is this, 102.41, I think that's a very clean level for it to retest at least once more. I mean, so what I would do is, let's see, I'm just going to take this measured move. I'm measuring from the top of the head down to the base, down to the neckline. And then I'm going to grab it and I'm going to put it at the breakdown. And that's going to give me my measured move, which tells us where Baba can potentially head if this thing, where Amazon can potentially head if this thing breaks down the way that we kind of, these things kind of play out. So yeah, this puts us at about $80, $82. But again, look at how strong the support is. It's touched here 4 or 5 times, right? 1, 2, 3, 4, 5 times and bounced every single time. Those tickers in the range 0.3 moves. So the tickers with range, i.e. 3+ moves are Tesla, Nvidia, Amazon, Cost, Dash, Coin, Microsoft, Snow, MSTR. Yeah. DYT, let's keep it in study hall. Actually, you know what? I'm gonna get rid of study hall. Let's keep it in. Let's keep it here. Let's keep it here. Trade floor. No, you're good. You're good. Let's keep the chat because I think we have too many rooms and I want to do some clean out soon. Let's keep the chat here. Okay. So I see a measure move coming down to 80. I don't think that's gonna happen anytime soon. I think that it'll be like one of those slow grinds down. Baba did it really soon, but also Baba had that catalyst of, first of all, Chinese tickers, when they drop, for whatever reason, they drop like crazy. Like they just go like anchors, right? Anchors tied to their feet. With this, I mean, this is a very strong company. It's actually obviously in the same realm as Baba. So I see like a small grind like this, small grind down, like just painful movement down, right? So what up, tech lover? So this is what I see with Amazon, but I don't see it happening that quickly. I see it happening maybe over the course of a month or something. Now, if everything, inflation numbers stay high and Fed they're talking about 100 basis points hike now, and I think that is a very strong catalyst to bring the rest of the market down. And I think that Amazon serves to come down with it. Now we'll set 80 as a price target, and where is it? So we'll just set 80, and we'll just we'll keep that on our chart. Ultimate price target based on head and shoulders. It's taking too much space. Measured move. All right, so I'm just gonna keep that on my chart forever until it touches 80. That I could be like, I told you so, right? So it took out this uptrend that I drew on Sunday, this blue line. It took it out this morning based on the gap down, but then I think this is the same thing that happened when Russia started to invade Ukraine. That night, the next morning, the market gapped down like crazy. Whatever day it was, right? I'm not gonna go back to it, but whatever day it was, the market gapped down like crazy and then ripped and fell right back into went right back into its trend. It was like one of the greenest days in a long time. And so this is kind of the same reaction where the market opened up very low and then filled the gap immediately. So now the real test is going to be tomorrow. I think we're going to have a lot of fun tomorrow because, although we don't have like Wednesday expirations for SPY, we still have SPX 0 day. So that's nice. And then we'll have like one data expiration on really pretty much the rest of every other ticker on the market. So we came down here. I'm going to go into the 1 hour chart to see if I can try to pinpoint some pivot areas and some clean areas where we can fall. So there's kind of another head and shoulders forming on the 1 hour, right? If you count this level here, I'm going to draw it in boxes so that we don't get confused. By we, I mean me. Let's see. So there's kind of a shoulder here, the head obviously, and then this is a little bit higher than I want, but this is a very strong pivot, especially, and the rest of the market did the same move for the most part, except for some companies, a handful of companies, but the rest of the market did the same thing where it kind of, pivoted down midday and pulled back. So now what we want to see is, we want to see Amazon break down, and I'm looking across my screen at the horizontal line at 109.98. So I'm going to mark it at 109.98, but we can call it 110. And what I did was I found the resistance here, a little bit of a reaction here, but this is really nothing, right? This right here, I don't think is much. And then support on these three candles before it fell, and then a resistance right before we woke up in the morning, right? And so I want to see it kind of test this level. If it breaks down on this level, which I think for whatever reason, I just have a feeling that the market is bearish. For tomorrow, I think the bounce was extremely pronounced. I think that my gut is telling me that there's more downside tomorrow because of the amount of because of what I've seen in the market, right? Because of the amount of buyers that I saw step in. There was a bunch of stuff in the flow that told me that everyone's hedging. A bunch of people were selling puts. And then nobody was buying calls. They were just selling puts and nobody was buying calls. And so that, when you sell puts, it's bullish. When you buy calls, it's bullish. When you sell puts without buying calls, it's like, it's not really that bullish. Like, it's kind of a fake signal, in my opinion. So I want to see it break down this level right here. We'll just call it 110 psychological level. And then from there, I want to see it kind of retest that trend line, right? So break down here, retest this trend line, and then that's what's going to tell us which direction this thing is going to go. If Amazon, I don't think Amazon has such a heavy weight that it really holds up the market the way that it used to. I might be wrong about that. I haven't really watched Amazon in a while, but I don't see like a lot of people on Twitter talking about Amazon like that. So maybe I'm following the wrong people, but so we have 110 And then the next level is, I would say, like 108.31. I'm just looking over to the left, and I see support and resistance touching on this level right here. So let me just mark it. Let's see, kind of right here, right? I'm seeing, you know, obviously support, resistance, support. So, and that coincides with where the trend line is. So this is going to be a strong area for me, in my opinion, right? I think it's going to be a strong move. And actually, I bet you if I draw a fib on this, I might be wrong, but if I draw a fib on today's move, then that puts us right around the 382. So there's three things that are telling me that this is going to be a magnet, and it also might be a strong spot where we might bounce. You know, we have the trend line, we have the previous support resistance, and we have the Fibonacci measure move from today's impulse, right? So that's the area I'm looking at for a bounce. If you want to play puts, I would say maybe do the 108 and just play it pretty much into this level. Amazon might not even give us opportunity to do it. It might put a candle like this in pre-market and open up around here somewhere. That's another thing. Like, this market's so funny that the biggest moves are made in the pre-market for whatever reason, and then like you'll get like one nice move at open, and then the rest of the day is choppy. So it's interesting. Let's see. Amazon is part of. I think Amazon is. Are they weighted in XRT? Let me see. XLY. I think. Let's see. Okay, just wanted to make sure you guys can see my screen. Yeah, whatever, bro. Save, bro. Whatever. Let's see. Holdings. Amazon, I'm sure, is in this. Yeah, Amazon is the highest weight in XLY, 22%. So if you want, so let's look at XLY. Let's look at Amazon daily real quick. Inverse head and shoulders with within a wedge with earnings in a few days. Let's look at XLY. Now, XLY has the same pattern because Amazon's the highest weight, right? So we have, I'll do it with the path tool this time. And again, this is the same thing that we had with Baba. Baba had that massive move down, found the spot. And then, so now this one, this one's a little uglier, but let's see. I really wanted to draw this as the shoulder here, but whatever. We have this, we have higher highs forming. And at the moment we have higher lows. So similar setup to Amazon. So where the fuck is I don't know where my toolbar is. Okay. So we have now XLY. The reason why I bring up XLY is because Amazon has earnings in a few days, and based on, you know, like DYT was telling us earlier, sometimes you want to buy safety in the form of time when it comes to some of these plays, especially earnings plays. Another way to buy safety is to play, for example, like XLY with a large weighting in Amazon. XLY has much less of an IV crush or IV exposure to the move that Amazon makes. I think it's still going to be affected because it's such a high percentage. You know, and I'll go ahead and let me see if I can find. I'm going to open my TOS and I'll share that screen with you so you can see it. And we can do it together. Change windows. Thinkorswim. Wait, is that the right one? Yeah, Thinkorswim. Okay. So I'll go to Excel. So Amazon. So we're at Amazon. Let's go to the trade tab. And we see that there's a $2.21 or $2.22 market maker move, which is the implied move. That's IV. That's the amount of a move that we need to capture before we make money, right? If we don't capture that move, if Amazon stays within the range of $2.22, after the large event, which is in this case it's earnings, then everybody gets clapped. Bulls and bears get clapped, right? If you got calls or puts, you get clapped. So 222. Let's look at XLY. XLY might have one. Let's see. Yeah, XLY has one, $1.50. I mean, it's obviously less than what Amazon is because Amazon is only 20% weighting. 20% of the weight of XLY as a sector, but XLY does have it. So XLY only has to make $1.49 for us to not get killed by theta. Now I'm gonna pull up the chart. Let me get rid of some of these studies so we can just see some clean chart here real quick. Let's just keep that. Hide the cloud. I think it's the cloud is the biggest one. Hide the EMA cloud, and hide VWAP. Okay. So looking at, so now what I like to do also is I like to look at some of the biggest moves, for example, this one, and see what the range is on those moves. So that we know, like, if something needs to move $10, then I need to find a $10 move within its history for me to say I even want to play it, right? So this is another way that I pick my strikes too. Like I look at some of these big candlesticks and what levels they make big candlesticks, and then say, okay, this thing can, if it's at a key level, then it can make a big move, such as, this one has a range of $8.45. This one has a range, and I'm just looking right here in the middle of my chart right here. There's an R, and that's range. This one has a range of $8. This one has a range of $9.25. So this thing can move $9 in a day, right? This one has a range of less than $7, and it also can get really tight and move $2 a day, right? This one, that was $2.92. This candlestick here has a range of $3, and this one has a range of $3. So between $10 and $3. And what you want to do is make sure that you catch it on a $10 day. When people say, you hear all of us talking about inside bars and inside days. What happens is when the range contracts, when it gets small and tight, like when it gets like tight like this and tight like this, and it puts in a small day, such as this one has a $3.51 range, meaning the high and the low, the difference between the high and the low is $3.51 on a $144 stock. After it puts in small days like that, it puts in big gappy days. Range contraction leads to range expansion. This day we put in a $6 move. Next day it gapped up, and then it put in another $6 move. Next day it gapped up and then put in another $4 move, right? So I say that to say basically $1.50. I think Amazon's earnings will catalyze XLY to make a bigger move than $1.50, especially when XLY can make a bigger move than $1.50 on its own, right? So if you're bullish, let's say you're bullish on Amazon, you think it's gonna do great. By the way, the Prime numbers that came out, I think they weren't the best, but also even if they were, let's say they were the best numbers that ever came out, that isn't captured on this earnings report. This earnings report's already been written, it's already solidified, it's sealed. They're rehearsing probably how they're gonna read it at this point, right? They're sitting, the board is sitting down and saying who's gonna read it and what's the pace and what's the cadence and shit like that. That's what they're discussing. All the numbers are already set. This Amazon Prime Day, which today's the last day, by the way. I got a really nice coffee grinder for like $20. They're not gonna report until September, or October rather. So don't use that as a catalyst. I think like there was one year that Prime was such a, it made such a, I think they had reported, oh hey, there was such a big ass move or such a big sale, so many people bought and spent so much money, and that caused I just posted the coffee grinder that I got on the trade floor. It's $27.17, and you can get it tomorrow or you can get it by Friday. When they're like, oh, we blew out and made 3 billion in sales, and they tweeted that like halfway through the day 3 years ago, and then that was a catalyst for people to say, oh shit, let's buy Amazon. But people aren't, I think the report came out like not that good. The biggest category was like home decor, and even then it was like down 20% from what they normally thought, what they normally expected or whatever the case is. So I don't think that they're gonna do well. I just don't think they're gonna do well. So but if you are bullish, then go ahead and if you want to play Amazon, you can. I would play XLY for some safety. You can play the weeklies, and I wouldn't stay too far out the money. These weeklies have a terrible, what is this? Yeah, look at these spreads: 10 cents to $4.85. Like these spreads are horrendous, right? The good thing with these spreads is that you can probably bid like a little bit higher than this, like bid like $1.30 or something like that, $1.50, and you might get filled. And then immediately you can set it to sell for a little bit less than this, like 270, and you might get filled. That's the only good thing about wide spreads, but you really need to have patience. Like, it can't be your main play. It has to be a play that you have it in the background and you don't even think about it, in order for it to really work. And you have to be really, really patient. But that's a strategy. But yeah, I think the put side is probably a little bit better. You know, if you look at the put side, there's higher bids, and the spreads are, even though they're still super wide, they're much closer and more realistic on the put side than on the call side. Let's look at Amazon. And you can buy Amazon for this week, or rather the week of earnings, which is the 28th. Shit, we can start buying it now. Actually, let's see. I will go out a week. And then remember, we got that measured move of we got $80 for the measured move, right? So I mean, I think that 2 weeks, 15 days is enough time for Amazon to make a move down to $80 on its own without the catalyst of earnings, right? Do you think that that's enough time, or not? Let me know. Let me know in the trade floor, or just unmute yourself and let me know. You know, if you look at this move here, right, and then same thing, you just measure it, activate it, and I'll just drag it. Yeah, I mean, if we break down through the neckline, it'll put us at 80, and maybe maybe 4 days, 5 days. This is 1, 2, 3, 4, 5, 6, 7, 8, 9 days of price action to get this move. So I mean, do you think in 9 days we can get down to $80? If you think so, then you know, maybe the 80 put is probably the way you want to go. So let's look at the 80 put for August 5th. I put August 5th because I want to capture a little bit of time. I mean, the 80 put, it's so cheap, right? It's super cheap. You know, at this point, it's like a lotto. You know, a month, $80 and a month out, and if this thing moves $10 to the downside, then this will go just about let's see, about 200%, because this will move down a couple spots. This will go down 200%. Now, if you want to be more realistic, I would say probably play the 100 puts. The 100 puts are going to be pretty much at the money, because the line's at 102. This thing can come down. It can come down to 100 in 1 day if it wanted to, like tomorrow. Let's look at the range. The range on this candle is, let me just zoom in a little bit. The range on this candle is $5.56. The range on this is $6.32. So that's interesting. XLY has a larger range nowadays than Amazon. This one's $7.81. This one's $7.76. So I mean, you know, from 110 down to $100, you could do it in 2 days. Two bad days, right? 2 bad market days, it can do it, right? If the daily fails this 50-day, this red line right here, if it comes back and retested it in 3 days, it can put us down to $100. So I think that this 100 is probably a little bit more realistic. The 95 is not bad. So I would say these two. So I'm just gonna go ahead and put it. I'm gonna put it, I guess, in the watch list channel is a good place to put it. Delete. I think the watch list channel is a good place to put it. Just finished drawing my analysis. All right, so and then I see that DYT dropped something on Oxy, and Carp was talking about Oxy earlier, and MRO and Antero. So I think I want to take a look at that real quick while we're all here. So I'm just gonna quickly post this and then move on to the next. Sorry for the noise in the background, guys. Watch list. Eyeballing the that's ridiculous. This is ridiculous. Okay. So that's about 146 or so. 140, 145. 145 for the 95 puts, and two. So actually, looking at this, I really like what this, the potential of this. And if you were on the call earlier, we were discussing how chains move, and really. So I'm just gonna put that there. Let me add my quick analysis to it. Head and shoulders break gives measured move of 80 price target. Okay, so for example, if you look at the 95 put, right? 95 put has 225 contracts traded today, 1,393 open interest, and and it's between $1.42 and $1.48. So let's call it $1.45. And then the next chain underneath it is the 100 put, which is whatever, and it's 240 on between bid and ask. So what that means is, and the math is math simple. I mean, it's just right here, right? If Amazon drops down $5, this chain moves down one spot, and this 142 becomes 236, and this 148 becomes 244. Really, depending on how fast it does it, has to do it fast, right? So I would like that 95 call, 95 put, right? For a $5 day, a day where potentially Amazon can drop $5. So now, like today would have been a good day to do that, because, or rather last night would have been a good day to jump on something like that, because for example, this thing it closed at 109. It closed at, where is it? It closed at 109.22, and it opened today at 107.03. So I mean, a $3 drop would have given this like a quick 60%, 70% overnight swing, right? Whatever. So I like that. I like looking at chains and seeing what the potential is if it does just, if it steps down once or if it steps up once. I love doing that. And I think that this is cheap enough with enough time, right? This is like 3 weeks out, a little bit over 3 weeks out, 3 weeks to the T. And I think that this is a good size contract for a move that might consider this breaking through that line. So that's a strong play for me, in my opinion. So Carp, thanks for looking that up. Real quick, let's just look at Oxy. I'm gonna blow through the rest of these because I have about an hour left, and I don't wanna go too crazy here. So I'm just gonna draw some lines on this. I see some higher lows. I see potential. Obviously we have this peak here. This peak here. That pivot. I'm not even gonna count. I'm just gonna count all this as one. I'm gonna count that whole area as one, and then I have this pivot here, and I have this pivot here. Let's see. Tech Lux Lover. I don't know what your level of understanding is in terms of some of these terms. So a pivot is, for me, in my mind, a pivot is, if you're following along, just look at this February 28. Hold on. Welcome to Brooklyn, guys. So you see this move up, and then it kind of stops over here and it changes direction. That change in direction is, in my mind, known as a pivot, right? Comes down, changes direction, that's another pivot. Comes up, changes direction, that's another. So a pivot is a change in direction. I like to mark pivots. I like to mark strong supports and strong resistances. So like, for example, this is a very strong resistance right here because it came and touched it 5 times before it fell. This pivot here is also a strong resistance because every time it came up to this level, it kind of sold off a little bit. Even over here, it broke out, but then it sold off hard. Tested support, support resist. So that's a really strong level, 63.24. Now, so there's kind of a head and shoulders kind of forming. We have a neckline here. It's kind of at the neckline, though it bounced as of yesterday and today again, right? So let me zoom in on it. Let's do. This is more of a strat play for me, and I don't know. I mean, I'm not in love with it, but Oxy is one of those that when it moves, it really pays you. I just don't know if it's gonna. That's why I put time on my energy play, because I don't know how long it's gonna take for this thing to move. So these are my targets for Oxy. To the upside, if we go downside, then I like to play clean targets. Strat is like the cleanest way to play these things. I'm gonna zoom out on this so we can. I'm done with it already. I'm not even gonna spend more time. Let's look at the chains. Let's look at some of the weeklies. So all of these two close to the money on the call side have higher volume than open interest. So that means that more people traded this than the original people that had the contract open the previous day. So these are getting more interesting. People are getting more interested in trading some of these. These are nice and cheap. If you think it's going to continue to go up, I like the 60. I like contracts that are like around $50, right? So I like this 60. If you want safety and you're going to play, it's 2 days expiration. I would play at that point. I would probably play in the money 58. And just call it a day, right? Play the 58s. It closed at 58 right now, so even if it goes sideways, you're not gonna get killed by theta. And then if it just makes a nice move up above the 21 day, which it really needs to, then at that point you're already banking, right? So, and let me just zoom into to show a little bit more of an example of pivots. I'm gonna zoom into the 15-minute. I have this study called Woody's, which is inside of the studies. There's a studies channel in the trade floor. If you go to trade floor, and then the 5th channel, studies and hacks, right? So there's a study in there called Gold Rush Woody's, and that's these auto populating lines. So what it does is it populates every single day. It gives you, and it's hard to see, so let me just quickly change my background so you can see it. Appearance, and then I'm gonna get into some of the tickers that you guys put in. All right, so you can't see the candlesticks, but anyway, it gives you this pink line. It gives you this pink line, which is like the midpoint for the day, and then it gives you these levels where whatever ticker it is can bounce. So like support and resistance, right? Pretty much support and resistance. So going back to, we didn't touch any of the support today. I'm just gonna switch it back to my standard color. I think it was this one. Yeah. So going back to it, this thing, it came up, it broke out above the first red line, which is right here at 57.94, and it came and tested the next one immediately at 59, and then immediately it fell back down. So right, and then it tried it again later on in the day, the same level, and it put in a nice doji at the top of an uptrend, and then immediately fell down. So that's a very nice use of a doji there. So I mean, these pivots, this is what I keep this study handy at all times. It takes up no space. The same thing happened, I think, with SPX on Jay's chart earlier. So pivots are good. This is a different grade, but I like it. It looks nice. So yeah, those are my targets. I think if you want to play this week, I would say maybe the 58 or the 59. The 60 is a little bit riskier since it's further out. Let's look at the first week in August real quick. I have a feeling that this 21 is going to reject that. I think we're going to retest this level here. This level here, 54.28 or 54.30. And if you look across, there's a bunch of price action around this level. I'm gonna go ahead and place it over here. 54.30. Right there is good. That level right there, right? We have like 3, 6, 9, 10, 11 days. 11 days where we tested this level at 54.50. Now let's call it. So I think we're gonna go back down to test that level, especially since we kind of couldn't hold the 21 day, right? We were up above it for 2 days, and then here we had indecision, then we immediately fell. So I think we go back down personally before we go up, right? So if you want to do the 54 puts, they don't have much volume and open interest on this chain. Let's look at a chain that does. August 19th. Yeah, look at these. These are 10,000 open, 10,000 OI, 14,000 OI, 11,000 OI. And on the flip side, we have on the 50 put 13,000 OI, 6,000 OI on the 42 and a halves. I don't think 42 and a half is feasible, but I definitely think that the 50 is possible. I for sure think that the 55 is possible. Yeah, these are a little bit pricier for, especially for oxy and oil, energy tickers. I don't really, they take a little longer to move, but you're paying for safety. And I think, if you pay for this contract, this 55 call, and you have the safety of swinging it for a few, for 3 days, 2 days, 4 days, whatever the case is. Like, for example, Carp played AR today. And before I get off this, I'm just going to post it real quick before I get off and go to AR chart. But Carp played AR today. I think, did you enter today or did you enter yesterday? Today. So he got in today, and what did it give you, like 30% or something like that? Yeah. And what was your entry? Yeah, so 15% move, and that's a November call, right? Yeah, I mean, see, like I'd rather pay a little bit more money, and though the percent gain isn't as attractive, I mean, that's money in your pocket. Like that's that same $40 that, some of these contracts that we play now, these weeklies, it takes them the entire day to make the $40, right? I'd rather have something that's a little bit safer, has plenty of time, and in a week or 2 weeks, it'll surprise you and make some crazy ass move, and then you're at 100%, and now you can sell it. And even though you have 6 months left on the contract, you can sell it now and have peace, right? So that's my style. And I think that I want to take some bets on going back to that style. So let's see, Oxy. What the hell happened to the pivots? There's no pivots on this. I think more downside for Oxy. And let's look at different chains real quick, and then I'm gonna jump into your guys' list. Let's see July 29th. Like, even July 29th is kind of pumped. Like, look at this. This is for the 58 puts. It's almost $3. For the 55 puts, it's $1.63-ish. $1.63. I mean, that one's actually not bad. That one's not bad, and it's only like a $3 move, so it's actually probably the better play. I like, and I always look for volume and open interest on my plays. I don't wanna. Sometimes you can be the only one at the party and wait for the rest of the party to arrive, and then that'll kind of lift the value of the play that you're in. Lift the value of the play that you're in, but it's better to, these people are smarter than us. Some of these people who are buying thousands of contracts know something that we don't. So I like to kind of follow their lead a little bit. I like the 55p for 729. Let's see. And it costs about $1.63. Good OI. Let's see, 112 volume. And 1484 OI. Okay. So let's see, what else do we have? Study hall. Let's look at MRO real quick, and then we'll look at Antero, and then it's probably gonna be this exact same chart as Oxy. Yeah, I mean, it's entering the territory where I had puts before the last time I analyzed this. It gave up the 200 day, so that's big. That's really big. MRO gave up the 200 day, and let's go here. Oops. MRO gave up the 200 day and tested it on the bottom side. Couldn't hold it on these 3 days. So I mean, we put in 2 green days back to back, but it did fall underneath the 200 day. I bet you we could play some of these same levels again, right? Break of the low of day. I would take maybe the break of that day. I wouldn't even bother with today's break or today's low. Break of that day will give us about 50 cent move to the downside. From there, play down to 19. I see more downside for all of these. Hold on, guys. This is living in the city is like, it's like a psych ward. It's like, how many ways can we try to break you every single day? Right. So I see obviously lower highs and lower lows on this. Right. We have a low here. What are you guys arguing about? God, hold on 1 second. Sorry guys. Sorry. Forgive my 4-year-old toddler. 40 minutes and 45 seconds, even the notes and stuff. So 45. Okay, so yeah, I see. I mean, higher highs and lower highs and lower lows. XLE looks much better than this. Maybe it doesn't nowadays, but it's holding up pretty well. I think if you want to take a play on this on MRO, so the reason why we're talking about MRO is because what's his face is buying Oxy, and the crooks over at JP Morgan are saying that the energy sector offers the most attractive risk reward. So, and then just the headline says, sometimes it's good to take a worm's eye view of the markets, narrow down the search and market analysis to a particular industry or a particular sector. The zoomed in view offers some advantages that the macro lacks, obviously, blah, blah. So they're basically saying that they're just like on some very short term, maybe intraday charts. They're seeing that, and if they're looking at a micro view of a sector, then that means that they're looking for a play that's going to pay in a micro way, right? They're looking for a play that's not something they're going to hold into December, the way that I plan on with XLE, but something that they're going to probably play into the next month, right? So like if you're looking at the 30-minute charts, you're not gonna find leaps on a 30-minute chart, right? You can find your entry on a 30-minute chart, but you're not gonna find leaps on a 30-minute chart, right? You're looking at 30-minute charts, you're looking for something that maybe expires next week or something that expires on Friday, for example. So I'm gonna read that article because I just feel like I need to get a little bit more information. And then let me just see. Let's see. Yeah, I mean, this is kind of a crucial level here where we are currently. Yeah, right there. There's a level right there. Is there anything else before that? No, not really. The next level would be this pivot right here. Next level to the upside would be right there is a good level. So I'll probably stay away from this because it's a $20 stock. This thing, what does it have? Like $1.32 on this day. This day it had $1.68. This was a big day, it had $2. So I'll probably stay away from weeklies on this. I would consider maybe a longer term play on MRO. Right now it looks like it's giving me more downside. However, I do see kind of a falling wedge, which typically breaks out to the upside. I see this. I don't see it playing out right away. I see it breaking down and then bouncing, just based on the velocity at which these things are. Like, look at this big red candle, slow green, little gap, and then big red candle, and then just big red moves. The red moves are bigger to me than the green moves. So I don't see upside on it, but let's revisit it in a little bit, a couple weeks, or maybe maybe this Sunday it'll look different. AR went crazy today. Today it put in probably one of the rangiest days it's had in a while. It put in a $3.46 day. This day it put in a $6 day. It has earnings coming up in a couple of weeks, 2 weeks. So maybe this is a decent play for earnings run up. Just because one energy ticker looks bad doesn't mean that they all look bad. I learned my lesson with that for sure. I know that to be true. So these are my upside levels, and it would really need to like break down below this open here, and then we have some nice levels to the downside. I'm not in love with that one. Yeah, I like to put draw. You know, I don't come into the market with a bias. I let the market just decide where it wants to go for me. Because once you come in with a bias, then you know how that goes. You know how that goes. You go in headstrong and stubborn, and the market tells you that you're a joke, right? So so we have a high here. We have a yeah, this is not the right color. Let me just change this real quick. Anyways, forming lower highs and lower lows. And so right now it's formed, I think its first higher high, it looks like. So color I had. It had some blue in it. All right, that's gonna be it. Yeah, that's gonna be it. Whatever. So so it had all lower highs and lower lows, right? Lower highs and lower lows, and lower low, lower high. And this is, you always have to consistently look at this and know what market you're in. Know what market you're in. Right now, this thing is, I mean, it took out these kind of days and made a higher high here, right? Like it made a higher high on a daily, but this is still a lower high than this. And so I wouldn't consider it to be any kind of reversal or anything, nothing like that, until the price is above this 35.76 and it makes a new high up here. Once it's up here, then I would consider it being in a different, not in a downtrend, but now it's probably going to go sideways for a bit, right? So I mean, looking at it, the 21 is coming down and attacking it from above. You know, that's a very sharp, and what I mean by that is that's a very sharp incline down, right? Very, very sharp. Over here, you see how flat it was over here, and then it just really sharply came down. So, and then it rejected right at the 21. Right at the 21. So, you know, so I would watch it. I think that it would probably look, based on the way that it kind of is holding up, and buyers are still buying in the after hours at higher bids, I think that it might give this one more test at some point. This company, Carp, what's the what contract are you in? November 45. Okay, so I bet you it's like 19 or something. I think I have these things memorized. November 45 call for AR. I'm just putting it inside the watch list in case anybody's interested. You're already up 15% on that. Even at being up 15%, I think that that's still a good entry point for some. I do expect it to test this one more time and pull back before it continues to work its way up. It needs to break that 21. That 21, like it needs to show that 21 that it can do it. So November 45, it's sitting between 220 and 230 right now. It's 35 right now. Plenty of OI in there. You know, I love seeing that. That open interest is very beautiful. So AR 1118 45 call at 230 needs to take out the 21-day with conviction. I want to look at what was the other one that we said we were going to look at? I think we're going to move off of oil. But let's watch oil, because if one of them starts going sideways, then, and this is not the worst chart either. Now that I'm looking at it in the intros, you know, this has a trend line, a downtrend line that was broken today, and then it has the lower highs and lower lows, and it hasn't formed a higher high yet. But we do have a shoulder here, and then a head here, and then we have a shoulder in the same, pretty much in the same area over here. So that's very interesting. Sometimes you gotta zoom in. Sometimes you gotta zoom in and change your perspective to see things. So I'm gonna go ahead and post this intraday here. And I mean, 45 is just about $10 out. You think that it can move $10 in 4 months, right? So let's see. Also forming, and I'm just gonna I'm gonna direct everybody your way with this play. And inverse on the 1 hour. I don't know what the neckline is. Neckline looks like it might be at 34.84. At 34.84. Any questions? Ask this fella. Okay. Let's see. We did Oxy. We did. What is this? Amazon. Let's look at MRO real quick, and then we'll, or not MRO. Sorry. Not MRO. Let's look at Tesla. Oops. Tesla. This chart's all over the place. So Tesla is currently between a 50 and a 21, and look how funny that is. It formed a head and shoulders right into a previous level I have here. You know, here's your shoulder, here's your head over here at 778. Here's your shoulder, and then Matumbo back to the 21. So now it's holding the 21. It kind of, you know, it dumped underneath it and then pulled back up, and then dumped underneath it and pulled back up again. So tomorrow we got to see if it can hold this 697. Tomorrow it'll probably be 696 and change at the open, but we want to see it hold, and then just edit that. Hold level, hold this level, reverse calls, and I'm gonna go ahead and show the name on the right. I'm not gonna show the price. I'm gonna show everything on the right. What's going on? Hold. Oh, my TOS just died. Great. Oh, it's too long. Hold on. Hold this level to buy calls. Okay. There. So, and I'm gonna change the color of it so that it's very clear what it is, or I'll change the width. There. Okay. And then let's look at let's zoom out a little bit. Actually, let's look at the weekly on this. So I mean, I love it. I love it for this box that it's forming here. It sucks to trade if you're in Tesla getting chopped around. If you don't catch the right direction, you're getting killed. But what I love about this, especially on a weekly, is, you know, it likes to form these boxes. Like Tesla is great for price action. It likes to form these boxes, drop, and make these big moves, right? Even over here, it kind of formed this box. It formed this box, and then it broke out like a false breakout, came all the way down, tested the bottom of the range of the previous candles previous area where it tested here, and then from there it worked its way all the way up and went parabolic, right? It formed this big box over here, right there, and fell, formed another little box over here. So this thing just trades in ranges, in very, very tight ranges, and for a long time, and you can play both directions. Now, looking at it, it did, if you look at it on this scale here, it did a couple of back-to-back 3 weeks, which means the range has been expanding, right? So we have a broadening formation there, possibly. I always say possibly with these things because they're like, these feel like kind of like astrology, but let's see, like bad astrology, right? Not good astrology. So you kind of have that broadening formation where the highs are getting higher, the lows are getting lower, right? And now we're right in the middle of that, like smack in the middle of that range right now. So that's really interesting. If I go to let's go to the 4 hour. So we have a 4 hour, and if there's anything that I'm saying that's confusing or anything that I'm saying that doesn't make sense, please don't feel free to cut me off. You know, this is for you guys. It's not for me, right? I'm not doing this for me. So we have this broadening formation, which means that the highs are getting higher, the lows are getting lower. And Now Tesla's what it's basically doing is discovering. It's like a bad kid, right? Or let's say, yeah, no, it's like a badass 4-year-old. You take a badass 4-year-old and you put them in a new place with toys. I'm gonna get rid of this box, right? Or you put them somewhere in a house or in a room or something. They're going to walk around and go on a mission to go find whatever they can find to play with to occupy their time. They're gonna go look around for shit. They're gonna find little hiding spots. They're going to use their imagination, and it's gonna take them everywhere, right? And within that place. So which is great. Love it. Tesla's acting like a badass 4-year-old, where basically what it's doing is it's entered this new box and now it's trying to discover where it can go within this box. It's gone as low as here. It's gone as high as here, right? As low as 648.50 and as high as 764.94, right? So that's the range in which it's currently trading to find where, like buyers say down here is low enough and sellers say up here is high enough, right? Stay within that range. So now it's either going to retest this low level or retest this high level. And when you see sellers step in, it won't get any higher. When you see buyers step in, it won't get any lower. So I like to draw wedges. I like to draw when things are tightening, but right now things are kind of getting loose right now, right? Right now, Tesla's like, how far can I take it? Tesla can easily come back down. It can put another candle like this tomorrow and be at the bottom of this range if it wants to. It can put another big candle like this and in 2 days be at the top of this range. So Tesla's basically getting extremely volatile. And if it's anything to do with the CEO of Tesla, then that any bad news that comes his way in regards to how he manages his money and his life will probably bring the price of Tesla down. Whereas any proper moves that the company makes will probably bring the price up. Now today, DYT shared with us that the one of the officers, let's see, I'm looking, the autopilot chief, so the chief of the autopilot division stepped down after working with Tesla for 5 years. And this is what he said. He said, it's been a great pleasure to help Tesla towards its goals over the last 5 years and a difficult decision to part ways. In that time, autopilot graduated from lane keeping to city streets, and I look forward to seeing the exceptionally strong autopilot team continue the momentum. So it sounds like you're going to see this guy's name pop up as a consultant or on the board of maybe GM, maybe Volkswagen, maybe somebody else, one of the competitors are buying him out. This is like a very clear, the Adidas guy, the Adidas team buying Nike designers. It's very clear to me that that's probably what's going to happen. He probably got an offer and Elon was like, nah, I'm not going to match that shit. And then, we don't, like, if you want to leave, leave. And the guy left. Or maybe it's just the bad press, who knows, but the guy left, so now we can expect big moves based on some news. They have earnings coming up in 7 days, so a week from today is their earnings. I have to take a sip of water. Hold on. So with Tesla, I can give you an analysis, but all I see is just broad information right now. If it holds 658.52, which is a number that I have where it's kind of held twice now, it's obviously an old number. If it holds that, then and bounces, and you have a good support there, you can buy there. If it holds 696, is at this level, 697, whatever this level is. Actually, let me just zoom in. 696.66. If it holds this level where the 21 day is by tomorrow morning, then you can probably buy calls to for Friday expiration or whatever the case is. I won't give much further of an analysis in that because Tesla, I mean, it's just a wacky ticker. Let's see. I'm just gonna go through the list. If you guys have anything, just stop me. But these are the ones that have a big, and this is, so the list that DYT put, basically, I think she put it in both places too, in study hall and in trade floor. Those are the tickers that have days that are bigger than $3 days, $3 moves. Tesla moved $50, right? Tesla moved $51. Nvidia moves however much, right? Nvidia, let's see how much it moved today. Nvidia owes me money, but We got some of it back this morning. Nvidia moved today $9. The other day it moved $9, right? Amazon, we did already. Amazon's range is getting a little smaller, but still moves more than $3. Costco is a fun one. I haven't been able to master it the way that these guys have, but maybe one day. Costco has $13 days, right? DoorDash has what is this? $6 days. It also has kind of an inverse Head and Shoulders forming. Right, we have kind of a neckline there, and then we have a double bottom. Right, we have this bottom here at 58.27, and this bottom here 58.27, same area, and then we have a higher low, a lower low, and a higher low, and higher lows, right, and higher highs right into the neckline. So DoorDash is interesting. DoorDash can, and it put in a bullish engulfing day today. Even though it didn't close higher than all of this, it still put in a big rangy day today. So this is a nice one. I mean, we got the 21 that's curling up. The price is finally above the 50 again. I mean, it's done it a bunch of times, but it's above the 50 from opening below. So this is actually a really nice setup. DoorDash can probably, at the breakout, can probably see 80. I don't think it'll do it this week though. Let's look at next week, 80 calls. Next week's 80 calls. There's not a lot of volume and open interest, but I mean, if you want to get in, the 80 call is about $1.15, $1.12 or so, depending on how patient you are. You know, but it really needs to take out this level. So if you want, you can play like the 75s up into the 75.42 level, and then if it, see how it reacts there, and then roll up to like the 80 or whatever other bigger one. But I personally won't even touch it until it gets above this level. You know, if I had a very focused watch list, and this was on it, then I would probably play it into the line and then play it above the line. I don't have a lot of experience with Dash personally, so I'm not gonna do every kind of play on it. Like I'll set my alert, create alert, and I'll just tell myself to look at 80 calls. Right, and this alert gets pushed to me on the TOS app, and it gets sent to my text message inbox as well. So I got a sound on the computer, I got an email, I got SMS, I get it everywhere. So I have no excuse sometimes, right? So I set my alert at 75.57, just this area. I want to see it invalidate the neckline. I'm not even going to talk about it more. Let me post it just in case you guys want it. But yeah, Dash is one of those tickers that has a big range. So I think that the big range tickers are the ones that we need to stick with on days that they move, right? And then you find like range contractions, such as like these 3 days where it kind of traded in a box, and then out of the box, big move, and then rejection, big moves, right? So DoorDash, inverse head and shoulders, also a double bottom at 56-ish, forming higher lows and higher highs in recent price action. Neckline at 75.50-ish. I set an alert to look at 80 calls. So I didn't put a date on it because it could take a week to break that level. It could take a month to break that level. So I didn't set any alert on it. That's why I just put 80 call. So if anybody has any questions, go ahead and let me know. Okay, so I guess thank you, DYT. Thank you, Tech Lux Lover. Do you like to see the same patterns on multiple time frames to help with being able to determine which way you think a ticker will go? I like to see, yes, the answer is yes. I like to see, and maybe not the same pattern, but similar patterns. So like, you know, and what I mean by that is like, for example, this DoorDash. DoorDash has a double bottom, right? A double bottom tells me that, and I can switch this to weekly real quick. A double bottom, and I know it's a double bottom on a weekly, tells me that, and this weekly looks even better. Wow. Oh, that's a 4 hour. Double bottom tells me that there's buyers present at this level, right? So I have that double bottom on the weekly, right? Then I go to my daily and I say, okay, I have my double bottom on the weekly, and then I have a higher low here, higher highs and higher lows. It failed, and it formed a lower low, but now we have an inverse head and shoulders. So I have my double bottom, which is bullish, and I have my inverse head and shoulders, which is bullish, right? On top of that, I have higher lows forming, right? One of them is the head and the shoulder, but then one of them is something else, the arm, the elbow, right? Whatever. And then I have higher highs forming. So that's the signs of an uptrend, right? So I have my double bottom, inverse head and shoulders, and my higher highs and higher lows. The next thing I have is prices above the 21. The 21 is pointing up. Prices above the 50. So that's 4 things that are telling me that this is bullish. So now, if I decided that I wanted to get in calls, I have 4 reasons that are telling me I should get in calls, right? If I pull into the smaller time frames on this, I bet you I'll find another bullish pattern. And that's what you want to do. You want to answer your question, yes. I love to see, maybe not a head and shoulders on a monthly, weekly, daily, 4 hour, 30 minute, 5 minute, right? It might not be a head and shoulders, but it might be a head and shoulders into a bull flag. It might be a head and shoulders into a consolidation, consolidation, and then attempt to break out, for example, right? It could be a double bottom on the intras, right? Here's a double bottom right off the 21 day, pretty much. One here and one here. Another 21 day, double bottom off the 21 day. That's another reason. There's 5 reasons why I should be bullish. So to answer your question, yes. Maybe not the same exact pattern, but I like to see bullish patterns. If I were to come into this 15 minute or this 30 minute or this 1 hour, like for example, on 30 minute, we have like a shoulder here, and then we have a head here, and then we have a shoulder kind of in this area, potentially, right? I always like to look at, you can't just look at one side. You can't be one-sided in this market because it'll take your money. You got to say, all right, what are everything that's making me bullish on this? What's everything that's making me bearish on this? Put it, make a list. You make a list of, I got 5 things that say it's going to go up, and I have 3 things that say it's going to go down. All right, so it looks like it might go up. Let's look at the chains. What do the chains tell us? You come over to the chains and you look and you see what you want to see is people in open interest. 1,576 calls. That's nice. That's probably the heaviest on this whole chain. On the put side, 394 looks like it might be the highest on the put side. So it's not even that crazy, right? On the put side. If I go to I'm gonna go to the robot room and I'm gonna do the command OI. Oh wow, there's a lot of unusual whales commands in here, guys. Interesting. So if I do OI and then space and then I do the ticker, which is dash, hit enter, I'm gonna get a full list of all the open interest for a bunch of expiration dates, basically on the call, where the volume and where the open interest is on the call side and on the put side. Right now I'm in the July 22nd expiration. And July 22nd expiration has 10,000, pretty much 10,000 open interest. Let's just round up. And it has 55% of all of the open interest, right? 55% of this 10,000 is on the call side. 44% is on the put side. And then 55% of the volume is on the call side and 44 on the put side. So it's a little bit more bullish than bearish, just slightly bit more. It's not overwhelming. It's not like 90% or 80%. It's just 50%, right? So if you like a play for DoorDash, maybe not this week because we're running out of time, not this week or next week because we're running out of time, but let's say August. If you like an August play, then I would go into the robot room and type in the command and just watch, take a look at the expiration that you want. For example, 8/19 expiration. And I'll post it on Trade Floor, and I'll post it in the hotline chat as well. Where is it? I think that's where you are. You're in the hotline chat. Yes, you are. I like this hotline chat. I just read what Carp said about Amazon. Yeah, man. My wife is the same way. Just spending all of our money on Amazon. So, and I'll post it in the watch list. If you like a play and want to see it develop a bit more in the direction that you think it will go based on your analysis, how many reasons parentheses how many reasons you it makes you bullish or bearish, right? So like the head and shoulders, the higher highs, higher lows, the 21 and the 50, all those things that we listed on both sides, on the bull side and on the bear side. And let's say now at the end of your analysis, now you've looked at everything, you're bullish, and so you watch the change. You know, if you like a play, you want to see it develop a bit more in the direction you think it'll go based on your analysis. Look at the way that the volume and the open interest changes. Look at the way the volume and OI changes day by day, right? And what that means is you like the 820, the August 19th expiration, then look at August 19th and look at the numbers. Look at the OI. Does the OI increase or decrease tomorrow, right? Does the volume increase, and is the average volume picking up, or is it decreasing, right? Is it getting more bullish or more bearish? Right now that 819 is super bearish. It's 63% OI on puts and 63% OI on volume traded today. Right. So if that comes down, if that becomes 50% tomorrow and then becomes 40% the next day, and volume is increasing as time goes on, now we got something there, right? So and it's a lot of homework. It's a lot to do, right? Because you have to look at the chart, build your thesis, study the open interest, look for any catalyst. I know they have earnings in a couple of weeks. Like there's like all kinds of things like that, and this is how you do your diligence. You know, people are always like, do your DD, and they don't explain what that means. It's all of this. It's constantly looking at a million things to figure out, you know, which direction these things are going to go. That's why some of us lose sleep at night. That's why I find myself looking at charts at 1 o'clock in the morning, you know, besides life, right? Besides work and family and just life. If you want to do well in this game, it's going to take some work. It takes hard work, right? So use a pen and paper and write it down and write it, right? Or use Notion, or use like a notes app or something, right? And track it. This is how you become better. That's how you become better. And it is a lot of fucking work, but you deserve it. You deserve to and when you list the reasons out, when you put them on paper, like, so think about it like this. If let's say you traded Apple, right? Let's say you got in one of my Apple plays and you made money. Let's say you got in one of my whatever play and you made money. And every time that, like, for example, I have a pretty decent hit rate with Apple, I have a pretty decent hit rate with Baba. So I know that whenever it's Apple and Baba, like if those are some of the ones that pay you, then what you want to do is look at Baba for yourself and look at Apple for yourself, and go look at and do a full analysis and throw on the indicators that you like, and look at just study those two, and you don't need nothing else. You just need those two, right? And so you don't have to do an analysis as deep for 25 tickers or 10 tickers, right? Or 5 tickers. You just have to pick 2 or 3 tickers and just analyze those like crazy. Get to know them, watch them every day, learn the levels, find out when the range is contracting, find out when the range is expanding, find out which chain you would have played. Like, don't even trade it, just watch it and just, you know, get accustomed to it. And then you just do this level of analysis. You list the reasons why it goes up or down. Just for a couple of tickers, 2, 3 tickers, 4 tickers. Like, what's his face? Tommy plays the same like 3 or 4 tickers. Tommy plays Tesla. He plays Apple, and I don't know what else. I think Baba, right? Like those are the 3 that he play. Like, I know if there's a play for one of those 3, he's gonna be in it, right? And he makes money off of them. Sometimes he doesn't, but for the most part, like, you know, that's how you gotta be. You know, you keep your eyes on just 1 or 2 or 3 tickers, and you give it a full, like, give it all of your energy. You don't got to worry about what the rest of the market is doing. You don't even have to worry about our call outs. You don't even have to worry about our call outs. You look at the ticker, you say, hey, look, this is what this ticker is doing. What do you guys see? Can I get a second opinion? You know, what do you guys think about this? Like, and that's it. And then you just stick to that ticker, and that ticker will pay you. So I know I'm just ranting, guys. I got another about 15 minutes or so. I'm gonna go through this list real quick. Where is it? Look at what Matt posted too about Paul Tudor James said. Paul Tudor James is goddamn gem, bro. KHC is in an uptrend on 30-minute. I'm gonna go to the daily uptrend. It's above the 200 day, above the 21. The 21 is about to cross through the 200 day. It closed above the 50 today, and it formed 1, 2, 3, 4, 5 back-to-back higher days, right? Back-to-back higher days. If we go to the weekly, it has 1, 2, 3. Well, this one ruined it here, but we're in an uptrend on the weekly, right? We're in an uptrend. We go back to the daily. It has kind of a cup and handle breakout vibe. It also has kind of a double bottom vibe going on for it. It also has an inverse head and shoulders vibe, right? Depends on how you see it. Like right now, here's the shoulder. Here's a head with a triple, with a double bottom or a triple tap or whatever. And then here's another shoulder. This shoulder is my favorite because it has a bunch of consolidation going on here before it kind of woke up. So I like it a lot. KHC pays you, especially if you go in the money and then it makes one of those big moves. KHC I would play just as close to the money as possible. I wouldn't get further out than 1 or 2 strikes. Let's see. KHC break above day high gives you 39.68, then that, and then you got this big gappy candle here. So you got a nice little gap in volume here on this one day. Just can go up a little bit. To the downside, I would take out the range, and then this is going to be a really tough level to break based on how many buyers stepped in here. And then the next level beneath that would be 37.55. KHC for this week, and they have earnings in a couple of weeks. They have earnings on the 27th, so we can potentially get an earnings run up, especially now that it's above the 50. Price closing above the 50 is signaling a bunch of algos, and people are going to decide whether or not they want to buy. What that looks like, it'll show up on your screen, on the screen. Hey, this ticker is above this. How many shares do you want to buy? Yes or no? Right. So for algorithmic trading, so very interesting. If you want to trade it for this week, I would go in the money. In the money, it's relatively safe, $39. And if you want to go out, then I would, if you really want to truly go out to get the percent gains, I will go to next week. And then at that point, get the 40. The 40 for next week looks pretty good. There's a lot good open interest on it, decent volume on it, and decent spread. You can get a 10-pack of this, and you get a 10-pack of this 40 call. And once you hit 30%, which is just a $9 move, $9 on the contract, you hit 30%, then you sell 8 of them. You let the rest of them run, right? That's how you compound your account. So this is a nice setup. Thank you, BT, for bringing this to our attention. I'm definitely gonna keep it on watch. I'm gonna set an alert on it actually too. Let me just send the screenshot. Let's see, watch list. So Carp uses snippet and builds small files for the ticker, picks their data so it can go back and look at volume and OI and see positions are being closed or open. So Carp looks at OI and volume on a date by date basis. If you use Notion.so, it's the same software that I use for our trade journal, which I'm gonna re-release it next week. I've been dying to, and I mean, we got the perfect catalyst now that we're in this market. And actually summertime's gonna get mad slow. So yeah, so the journal's gonna come back out next week. But anyway, use Notion. Notion has a calendar function, and if you like a play and you want to watch it and you really want to do a deep dive, you can take some screenshots and drop it in the calendar. Drop it in the calendar on the date, and then you can just study it. On Saturday night, you look back and look through and say, oh, it's trending up or it's trending down, whatever the case is. OI is picking up, is getting more bullish, etc., etc. That's how you do your analysis, right? I'm gonna set an alert for a break of high of day on this. Create alert. The high was 39.44. 44. Right. And then 39 or 40 for next. I mean, I wouldn't even play this week. I mean, I'm just not good at weeklies personally. Not like this late in the game, right? It's like 1 day to expiration, but you can do it. I'll probably alert it. I'm probably not gonna play it. I don't like to do that unless I'm scalping. Or 40 call for 722. At this point, I think I'm just gonna be on 722s personally. That's just my style, guys. I like a little bit of time. Hold on 1 second. Yeah, so I like that. I like this. This is very nice. I would like to take it above the day high. All right, so let me set my analysis and we'll go to the next one. I just want to finish through BT's list. Actually, I'll give you guys a little bit extra time. Inverse head and shoulders. Also, double tap on support. Consolidation. Oh, that breeze feels so. Oh my god! Thank you so much. Consolidation. Consolidation above. I have a market pulse line which I love, and it just turned green. It's this line right here. You see this line that turned green right here, and it's gray over here. It was red before. This is a bullish signal, right? That's another study that I have for Thinkorswim. It's inside. You see how it was red over here, and then it turned gray because we were consolidating, and now it's turning green because we're trending upward. So that's and then it's also like kind of like a support and resistance level too. That's another study that we have in the studies and hacks channel. If you look at it intraday, it'll act as support and resistance sometimes. So it's a really cool study. Really cool study. But I use it to determine the trend also. So it's consolidating above market pulse, which is green. Price is above 200-day, 21-day curling to cross through 200-day, closed above 50-day. So I mean, there's a lot of reasons why I think that this is bullish. And then let me just put the play. I would say I would trade 715 39 call, or next week 40 call. And let me put some prices so you can see how they move between now and tomorrow. I would say that's what, $75 for that one. Oh, sorry, that's next week. 39 call is $45, and next week 40 call is 35 bucks, $33. $33. 33. Okay, so that's what I see for KHC. I like KHC a lot. Very nice setup. Thank you for bringing it to our attention. The next one is CLX, and KHC has earnings in 2 weeks. So I'm not gonna put that on the analysis. Just know that it has earnings in a couple of weeks. CLX has a very beautiful inverse head and shoulders. Pretty much the same setup. What sector is this? I think is this consumer discretionary, but what's the spiders sector on this? If you guys know, just shout it out somewhere. Let's see. Yeah. So it has inverse head and shoulders, right? You have the shoulders at 137, and you have the head at 120. Big move out of that head into a bull, right? So you have the inverse head and shoulders, and you have this. If you just look here, you have this bull flag breakout, right? Bull flag breakout, or upside H, however you see it. We have kind of another. So there's like one neckline. There's like a neckline over here somewhere, but the real neckline is right here. It's your real neckline, and then we kind of broke it. There's also a cup and handle here. So like these patterns, the best part about these patterns is like you just need to see it the way that you see it, right? You just need to see it the way that you see it, and however you see it is however it's gonna make you money. You know, some people don't see the cup and handle, some people don't see the inverse head and shoulders, some people don't see the bull flag breakout. You know, so pattern recognition is it's, you know, that's why I like to say, hey, do you guys see this? You should ask. If you don't see it, you should like kind of throw your charts out to show it to us so that we can see if we're seeing the same thing that you see, right? So I mean, obviously we're in a massive downtrend, so I wouldn't play leaps on this. You see wedges everywhere. Yeah, wedges are. I mean, they're beautiful because they show up all the time and they're very clear. Like there's one right here. There's one right here. Right. Like they're just. It's just. Oh, it's like such a clean. Right. There's kind of that with this. And if you see wedges everywhere, then you should draw them everywhere and then play the breakouts. Hold on. There's a ambulance. I only hear the ambulances and the fire trucks when I'm on the phone. I never hear them alone. It's funny. So anyway, yeah. So I mean, this has a bunch of different bullish patterns. Even the wedge breakdown and bounce is bullish because whenever something goes down like this and then recovers in a certain amount of days, that's great, right? Like it does it here for the head and shoulders, or for the inverse head and shoulders. It fell all the way down, but then it recovered, right? Cup and handles fall, but then they recover. And when they recover, that shows that buyers are interested. It's very bullish. So I like this setup a lot. I'm gonna just draw some levels on it. If you see any other patterns on it, then and it's a pattern that your journal tells you that you should play, then go ahead and mark it down and add it to your list. Add this, add it to your watch list. I didn't want to draw that one, but whatever. That's fine. And then if you want to play puts, you have three fresh lows plus this one, and I would just call it that one. I would play calls on this. Yeah, I would play calls on this. They have earnings they have a dividend payout on the 26th, and then they have earnings in August, so you have plenty of time to buy some contracts. I just want to see. I know that this is not a very populated. Like this is like a boomer. CLX is kind of like a boomer ticker. So the monthlies, the third Friday of every month usually has the most open interest on those kind of tickers. So I mean, I wouldn't go up. I would probably play into the 150s or the 155s just based on where the 200 is green line. The 155 for August 19th is $3.40. It doesn't have crazy OI. If you want OI, go for the 160s. I just wouldn't expect it to get into 160 because of this. This 200 is going to give it a tough time as it has in the past. DYT, yo, have a good night, yo. Thank you so much. You're a killer, and we appreciate you. So yeah, I wouldn't expect it to go above 155 just based on its 200 day. As you can see, it rejected it here in the past. So but you can buy the 160s and play them into the 200, right? Play them into the 200 day and sell them before it rejects. You don't have to buy these strikes and expect them to go in the money all the time. You don't have to do that. If we go into like July 29th to give ourselves a couple of weeks, there's not a lot of open interest and volume. Some of the volume is actually on the put side. So let's see this week's. This week has a lot of volume in OI. The 150 calls did 366%. If you would have bought them yesterday, you would have had 366% profit today. Let's see. And they're between, and that's not, I mean, I don't want you to think that's insane. That just means that it went from 20 cents to 60 cents, right? Or 20 cents to 80 cents. That's 300%. So, let's not lose our heads when it comes to some of these percent gains. This is a little bit more impressive, 305, because this was like down here somewhere. This was at 149 and it moved up 4 spots on the chain, 3 to 300, from 80 to 240. So that's a nice move. If you want to play weeklies, maybe play the 150s. Maybe play the 150s and scalp them. I would play even closer. This 148 call is I think is much better. Good price, very cheap, decent spread, whatever, nothing crazy. So I would play, if you want the weeklies, play the 140s, the 145s, the 148s. I would look for a longer play on this personally. I think that I would look at seasonality to see when CLX typically has its strength in the year. We'll look at that now in a second, actually. Inverse head and shoulders, cup and handle, full flag, you choose, right? Downtrend break, neckline break. Don't be shocked if you see a retest of the neckline. By retest, I mean it broke out today. It'll come back down and kind of find support on top of it. The neckline. Let's see. I am bullish on it. I would play a 150 call with time on it. This looks like it's targeting the 200-day at 153-ish. If you want to scalp or day trade, 715, 148 call is safe-ish. It's safe because it's pretty much at the money. All right, and if you guys don't know about seasonality, if you go to the robot room and you type in T-seasonality and then you type in CLX, it'll give you the seasonality, which basically tells you what day of the week it's strongest and what month of the year it's strongest, right? CLX strongest month is in July, which we're in July now. So yeah, maybe this earnings season, maybe we have a nice run up into earnings, based on seasonality, based on whatever, right? Whatever. Maybe there's a Target and Costco and Walmart bought hella Clorox to stock, and that's part of the stuff that they have overly stocked. Maybe they did it. Maybe it's not overstocked, and maybe they just continue selling it like crazy, especially with the new variant. You know, COVID was a crazy catalyst for CLX, so that's another good play. BT's full of good plays, yo. Let's see. I think I have like 2 more in me, so let's just quickly go through. CrowdStrike, ABBV, and LI. Let's see. CrowdStrike, ABBV, and LI. CrowdStrike forming higher highs and higher lows. It's in the channel. This chart is tatted up. Let's see. I see this, right? I see that with that, right? So, and it's at the kind of at the bottom of the channel, and there's buyers based on today's move. Not my favorite. Not, you know, I mean, it's above the 50. It closed above the 21, so that's not bad. Let's see. What's the other one? ABBV. ABBV is beautiful. It has kind of an inverse head and shoulders. Also kind of a bull flag, right? We have like the inverse head and shoulders, a bull flag, consolidation. The 21's about to cross the 50. This is a beautiful setup, right? Here's your head, your shoulder, head, shoulder. Good consolidation. Really, really beautiful consolidation here. Right. A bunch of sellers here. So once we get above that, it's going to be a buying frenzy, I think. So I'll post this one. Somebody find a play for it. I'm not gonna play myself with this. I'm not really too good at ABBV. Let's see. Actually, I'll find one for us. Watch list. This one. Yeah. Reverse head and shoulders. Shoulders. Great consolidation above the red 50-day and 21-day looks like it will cross up through the 50 in a couple of days. Earnings at the end of the month. Earnings at the end of the month. What else? This week, crazy OI and volume on the 150s. So if you want to scalp or day trade, then that's the one that you want to look at. Calls and puts. Calls and puts, both attractive. If you want to scalp, I like this for a breakout of the box to see. So there's this thing has zones, right? Just like Tesla. So there's a zone here that it's currently trading in. It's not working. So there's a zone right here where it's currently trading in. And then there's another zone over here. So a breakout of this zone will put it into that zone, right? It breaks out and it'll try to trade in this zone for a little bit until it breaks out again. So, I mean, I would set like a breakout price target of this would be, let me give you some levels. And it held some previous levels. Remember, I remember when I used to chart in pink. Held some previous levels. I have that. I have that. I have this right there. And then we got this. And then we got this. And then to the downside, break below low of day, 150. And then 148 from there. 151, 150, 148, 72. So I'll post this new chart. Take a picture of this new chart. And then we'll look at the last one. I gotta call it. I gotta do some yoga with my wife. BT, ABBV, and so I looked at crowd. Crowd has kind of this rising channel, and it's above the 50 day. It closed above the 21. It's at these previous levels, which I drew out from a while back. I want to see it put out a new day high to try to test the top of the channel. I don't love it right now, unless you see something else on it. Maybe it'll fall actually, but I'm just gonna do this last one. ABBV is phenomenal. CLX is phenomenal. Really, the ones that I put in the watch list are really, really great. So thank you for all of these. I mean, these are fantastic. Let's see, LI is gonna be my last one, and I gotta call it. LI has a nice double bottom at this level here, right? Nice double bottom, and then you got this kind of wedge vibe, right? Kind of a wedge going on here. I'd like to connect these things. And then if we break above this looks like, I mean, it bounced right off of the market pulse, or not really, didn't really touch it, but it bounced off the 21 day, break above that, and we can get this close. Yeah, this close right. Oh, so really break above the close, and then we have a few upside levels. And if it takes out the 21 day, it's not what I wanted to do, but if it takes out the 21 day here, I'll put my line at the market pulse, because market pulse always acts as a support. And then underneath this one, we get really gappy. Actually, let me just remove this. I'm going to draw it over here. Underneath this one, we got that little gap. So let me go ahead and mark this one with market pulse. And then show it on the right. Yeah, we get really, really gappy underneath that 34.79. I've been staying away from all of these things, these EVs. NEO, I've been seeing NEO pop up a lot on my sizzle index, and I see a lot of people making. I saw like Jerome putting a bunch of profits from NEO a couple days back. So, um, so maybe there's something there, but this definitely has a nice look to it. It's holding it. It's bouncing off the 21. The 50 just crossed above the 200, which is a golden cross. Beautiful golden cross, which is another algorithmic signal. If we go to the weekly, I bet you there's like a cup and handle on this. Yo, are you serious, bro? Yeah, so there's like kind of a massive weekly cup and handle, double bottom on a weekly, right? Oops. We got the fire trucks, and then we got traffic, and then there's an ice cream truck selling ice cream to kids at 9:47 p.m. Talk to me. What are we doing? So this is a beautiful setup. I like it a lot. It's also like kind of a big, beautiful daily bow flag. Yo, this shit is crazy. Yo. It has a nice, big, beautiful daily bow flag. The 21 cross through, like all the fast moving averages are crossing through all the slow ones. So this is probably one of the best setups because it's been bullish. It's already mad bullish. I can't believe we missed it. I mean, I purposely stayed away from EV. But it looks like we're gonna have to play EV again. So LI, big cup and handle. Cup and handle. Can't type anymore. On the weekly, along with a double bottom, forming a bull flag on the daily. Bullish engulfing candlestick today. Double bottom on 36.20. Closed, tested and closed. Golden cross, 50 crossing 200 to the upside. Yeah, this is a really beautiful one. If you want to play weeklies, I would say I would keep it pretty much at the money or in the money. I would play 38 call. I would stay at or close to the money for weeklies. Yeah, 38 call is attractive. And then next week, 38 call. Next week, attractive for both this week and next. 38 call. And then, if we get a nice bull flag breakout, measure move gives us a big number, which I won't say on this call because you guys are gonna be like, nah, fuck out of here. But it'll put us at 60 at some point if this is a true bull flag breakout. So that's it, guys. That's all I have. I am losing my voice. My wife came in here twice already, which means it's time for me to go. Thank you guys for being here. If you guys have any additional chart requests or anything that you want to chop it up about, obviously you could use a server or you could slide in the DM. Thank you guys. Love you guys. Tomorrow is another day, and tomorrow we will make a little bit more money, just a little bit more, right? It doesn't have to be a massive amount, as long as we don't lose any. That's the whole point of this whole thing. So yeah, so thanks guys. Thank you. And I'll talk to you tomorrow.